Welcome to RenMac Off Script. We're going to discuss markets, economics, policy, history, and life. It's the 26th of April, 2024. I'm Jeff DeGraff.
I'm Neil Dutta.
And I'm Steve Pavlik.
As a reminder, all the charts that we reference are posted to our Twitter account and our LinkedIn account. Our Twitter account is at RenMac LLC. And you'll see some disclosures and a bunch of stuff at the website, so feel free to check that out. There's plenty to talk about, but I think the topic du jour is the GDP figure and the relatively robust inflation figure, Neil, obviously of concern to the markets and the impact that the 10-year yield's having. But when you go through and get under the hood and rip that engine apart, what are you seeing? Growth robust? Is it really as bad on the inflation front, or do you think it still has the ability to cool as we get into the summer?
Well, I think the headline number rose 1.6% annualized, and that was below the consensus expectation. But that masks a lot of strength underneath the surface because the weakness was driven almost exclusively by trade, net exports, and inventories. And those two components are the most volatile components within the GDP data, and they tell you almost nothing about the next quarter. So when you take out trade and inventories, I mean, you're talking about something that looks closer to 2.5% to 3%. Private domestic demand, so GDP, net trade, inventories, and the government, that ran close to 3% in the first quarter, and that tells you more about next quarter growth than GDP itself. So I think this sort of sets the table for, it puts a floor underneath how weak Q2 can be. I mean, it's sort of 2.5%, 3%, I think is a reasonable baseline expectation. The core PC inflation numbers were hot. This podcast is being recorded about an hour before the core PC number for March comes out. There will be revisions, seasonal adjustment factors being updated and so forth that may sort of cushion the blow a little bit, but ultimately it looks like core inflation came out firmer than people thought, and after the revisions, my assumption would be that most of that was front loaded in the quarter. So it looks like January and February will be somewhat stronger than we previously thought, and March is still firm, but not as firm as it would be had there not been any of those revisions. So I think that's the way to think about it. Now, going forward, my sense is, and I just spent a week in London. I think the consensus is more or less on the right side of the ball here on growth. If you look at GDP expectations, they've been generally going up. And so, I don't think the economy is kind of getting away from the Fed. I think we're kind of growing at 2.5%. And I think that's fine. It's not something I would, I wouldn't call for recession or anything like that, obviously. But, for example, residential investment added 0.5 percentage point to GDP growth in Q1. Given the backup in mortgage rates, it's highly unlikely that continues, right? So that would probably come out in Q2. Maybe you get a little bit more from inventories. So it's, I don't think we're sort of like galloping ahead here to like 3% real GDP growth on some kind of sustainable basis. So I think I think the consensus is about right on GDP, but the consensus is probably now gotten a little bit over their skis on inflation. So there's more downside to inflation estimates in the consensus than there is upside to growth, in my opinion. There was a lot of sort of idiosyncratic one-off factors in the core inflation numbers that probably made it look a little bit firmer than what the underlying trend is. And, to the extent that we saw upside surprises in the first quarter, I think we need to be cognizant, or at least open to the possibility that we may see downside surprises of an equal magnitude over the second quarter. And that's kind of what I've been suggesting. From a fundamental basis, it's really difficult to kind of tell people why inflation perked up in the first quarter. You have, unit labor costs have been generally coming down. Wage growth has been moderating. Despite strong employment growth, wage growth has been moderating. If you look at productivity, it's been picking up. The dollar has been strengthening, right? So moderating unit labor costs and stronger dollar, that does not exactly scream upside inflation risk in some kind of fundamental way. So, I think kind of stick with first principles. And, from my perspective, I think there's more, there's more downside to how the consensus is looking at inflation than there is upside to growth. So I think that's what I'm focusing on. Not worried about growth. I mean, I just don't have a fight to pick with the consensus on that.
So, given your T-shirt here, your New York Giants T-shirt, upside or downside surprise with the number 6 pick of
We
Malik
are
Neighbors?
pleasantly surprised by Malik Neighbors,
Oh,
LSU. We needed a good wide receiver. Thank God they didn't try to go for a quarterback. I mean, that's been ending horribly, but in the last couple of, but yeah, I think it's good.
all right. Good luck this year.
Trust in Dayball.
There we go.
But we're more concerned about the Knicks.
Well, Rangers game 3 tonight, so
Feels like
they're
1994. I'm reliving my childhood.
rolling. Steve Pavlik, probably we can talk about Trump's immunity trial a little bit, but clearly the polls are the longer term polls have shifted more towards Biden and a toss up. But I know you're getting a little bit of a rebound effect, right? The kind of honeymoon period, I guess, if you will, off the State of the Union seems to be wearing off a bit. Talk to us about what's going on in the polls and how important is it that Trump is wrapped up in court versus some of these campaign trails.
Well, sure. We're just quickly on the NFL draft. Shout out to Gonzaga College High School, my alma mater, for putting 2 of the top 11 picks in the NFL this year with Caleb Williams and Olu Fashanu. But getting to the mean reversion in the polls, I think that's significant because the March Bloomberg Battleground state polls, and that's important because, again, it's not a popular vote. It's an electoral college, which means there are only a handful of states that matter and really just a few thousand voters. And so that's why I really put more emphasis on this. And what we saw in March was this Biden bump. And sort of the thought at the time was, is this actually a durable shift or is it merely just a State of the Union bump? And it appears to be more the latter because Trump has more or less retaken his lead in 6 of the 7 states. Interestingly, Biden's now ahead in Michigan, your home state, Jeff, by 2 points. We've previously been trailing. However, he was up in Pennsylvania. Now he's trailing to Trump. And I can't help but think, does it have to do something with his policy towards Gaza? Everything he's doing to try to appease Arab voters in Michigan may not be coming across too well to the 300,000 Jewish voters in Pennsylvania. So we'll see if he can thread that needle. I think important to watch there. But really sort of bleeding into Neil's world a little bit, I think what you noticed in this poll after a few more positive months was perceptions of the economy and particularly Biden's handling of it. They had been trending up a little bit. And now they're back down. Voters expressing concerns about the prices they're paying again after, again, I think the past 2 or 3 in that survey had shown that actually been dissipating. So look, we're getting late. It's the end of April, and people are formulating their opinions on Biden's handling of the economy. And if things don't improve, I would say by July or August, even a late surge may be too little, too late for the Biden folks. So I think they should be concerned. So we'll see whether or not they can do anything on the policy front to try to alleviate that. So stand by on that. In terms of Trump's legal woes, yeah, I mean, he's been in a New York courtroom. I won't get into I'm not a lawyer with the case there by Alvin Bragg. I mean, I think most legal observers suggest that's probably the weakest case of all of them facing Trump. I mean, just at a basic level, it's tough to see how a state can convict somebody for a federal election crime. And there's a lot of debate whether or not that's even a crime. Talk about influencing election. Well, sure, that's what most people running for office do. They all try to influence the election to some extent. The bigger issue was more Trump's immunity claims in front of the Supreme Court. Trump's basically claiming that he has blanket immunity. You had the district court that sent it here saying, the presidents have no immunity. And my guess is what you saw from most of the justices is that the answer is probably somewhere in the middle. And I wouldn't be surprised based on the arguments if they send the case back to the lower courts to sort of try to flesh out the parameters of that. Because the big issue beyond Trump is going to be you're setting a precedent here in terms of what's an official activity and what isn't. And basically the district court just sort of rushed to get Trump sort of abandoned its obligations there to do that. And that's important because that makes it less likely that these federal charges will be heard before the November election. So I think that's sort of the big takeaway there.
Yeah, definitely. Well, I mean, it's just going to be throughout the summer. I think the one thing that's I get the sense that people are just waiting for Biden, whether it was the State of the Union or walking to the helicopter or whatever it is. They're kind of waiting for the big moment of like, yeah, you see, fine, we knew he was too old. We knew he was going to do, and he really hasn't done it, right? I mean, I know he stumbles and
Well,
he makes these gaffes, and they certainly look like they're, a cognitive ability, but they're not horrendous. They're just kind of like slips here and there.
wow, there's a question if we've just become immune to them as well. He made several references to his uncle being cannibalized by people in New Guinea this week, and fact checkers were able to confirm that was not the case. He brought it up twice. But look, I think what you're getting to is something that we sort of alluded to in a piece last week. Is Biden going to debate Trump? Trump is calling to debate,
Right.
and right now Biden's team is not committing to that. And you've had this public pressure by many of the news organizations, even the liberal affiliated ones, calling for debates. And I think his team's doing a risk reward analysis because deep down they know either what they have or what they don't. Now it's possible Biden could benefit from these low expectations, like he did the State of the Union, like he did in the first debate for Trump in 2020. However, if he goes out there and he just sort of reaffirms many of these fears regarding his cognitive ability, he could lose a lot of support. Whereas, if he just skips a debate, some people may be swayed by that. So that's something to watch as we get closer to the fall.
Well, one thing that we talked about last week, the three pillars of a low, the internal oversold condition, which we had, the external oversold condition, which we got earlier in this week, and then the one thing that's been missing is that sentiment piece. And the survey data came out this week, and there's a lot of different surveys. The AAII data, which is the American Association of Individual Investors, we saw the bull bear ratio contract out of the top decile. So it's somewhere, I think it's in the 70th percentile right now, which is about historically average returns. The II data, not to be confused, the AAII data, which is investors' intelligence, that also contracted. And then the Consensus Inc. data, that also contracted. So we had these elevated sentiment readings, which by themselves tend to be early. They kind of give you the environment that you're in, but they don't tend to be that good of a predictor of forward returns. In fact, if anything, the history would suggest and the data analysis would suggest that price or returns drive sentiment. So, no surprise there. The point being that we want to see sentiment start to cool off. And when the sentiment cools off, that tends to be good news as that third pillar for some type of tactical low. And we've seen that at least through the survey data. We have not seen it through the put call data. We have not seen it through the options market. So that's one area that's really more high frequency data that we like to see that hasn't yet percolated for us. But certainly, I think when we look at seasonality going into the summer, particularly in a presidential election year, you want to be long from Memorial Day really through August. So I think that's the bigger picture that we need to be thinking about. Looking around the world, I mean, I think it's interesting. Hong Kong had a 65-day breakout the other day. By the other day, I mean like 2 days ago, and above the 200-day moving average. So some indications there that you're trying to get a trend change. That's important because our long-term alpha rolling alpha model shows that the returns have been abysmal. And I mean, on a historic proportion, which usually is setting it for some type of low, you just need to get that momentum confirmation. So we like what we're seeing out of Hong Kong. And then the bigger issue, and I want to bat this back to Neil, is the 10-year yield. We've got resistance on the 10-year at 480. Obviously, yields have been creeping higher with some of this inflation data. It's moved our yield impact model into the top decile, which historically does put pressure on S&P forward returns. Not enormous pressure, not crash risk, not some of these things that the alarmists will start to hit the button over, but it does put some type of pressure on the S&P historically. And I think we're obviously seeing some of that. Neil, where are you on the 10-year yield? How are you thinking about it in light of the most recent inflation and the GDP data?
I mean, I think you either think this is the start of something or closer to the end of something. And I think it's closer to the end of something. I'm still struggling with trying to find out why inflation is going to continue accelerating at the rate it has. Now, if you believe that that's the case, if you think that core inflation is going to continue printing 3.5% at an annual rate, you should frankly start to be worried about the economy, because I don't think that aggregate incomes are rising that rapidly that we can sustain that. In other words, at some point, that this strength in inflation, if it continues, not that I think it will, but if it does, that will basically mean that real incomes will start to come under pressure. And if real incomes come under pressure, people will spend less. And if people spend less, then corporate earnings come under pressure, and that starts to hurt the equity markets. And it will kind of take care of the bond market in a sense. I mean, so I think that's kind of where I'm at. You should, I think that's how I'm thinking about it. Now, my baseline is that, core inflation moderates over the remainder of most of the year. And that kind of gives, kind of revives some of the soft landing enthusiasm we saw going into the year. But I go back to my initial point. You either believe it's closer to the end of something or the start of something. And, I think if it's the start of something, then that could be very, very challenging for stocks, at least in the short run.
Neil, what do you have on tap next week?
It's a busy week. Obviously, it's the first week of the month. We're going to get the jobs number on Friday. The market right now is looking for some moderation in payroll growth, 250,000 for April, with private payroll employment at 200,000, flat unemployment rate. It's the first month of the quarter. We'll see. Weird things can often happen on the first month of the quarter, but generally speaking, I think we see this sort of steady employment growth and moderating wage inflation. We'll also be getting ISM on the 1st of May, and market's looking for 50.1, another sort of expansionary print. The market PMI, or the S&P Global Manufacturing PMI, did come in below 50, so we'll see how that shakes out. And then, of course, we have the Fed meeting on Wednesday. So it's going to be a busy week. ISM, Fed, and then jobs.
Yeah, busy for sure. As busy as Donald Trump's week, Steve Pavlik? What's going on in your world?
Well, I assume he's still going to be stuck in that New York courtroom, making press conferences afterwards. But things I would watch next week. One, I would encourage people to check out our call Thursday on the trade outlook for both Biden and Trump. Kellyanne Shaw from Hogan and Lovells. She worked with Biden's USTR at the House Ways and Means Committee and was an architect Trump's trade policy at the White House. So please join us for that. And then outside of that, I'm going to be watching the betting markets in terms of Trump and Biden's odds. They had been mostly even. Biden had pulled sort of with a lead recently. They've come down a little bit after that Bloomberg poll we referenced earlier. A lot of people put a lot more stock in the betting markets. I'm not sure if they're just simply reacting to the polls, but wanted to see whether or not see the shift there that we are seeing in these polls. I think it's an important thing to keep an eye on. And then Wednesday, the House Financial Services Committee, I believe, is holding a hearing on bank merger guidance. So that could be interesting. So that's sort of what I'm keeping an eye on next week. In addition to the House returning, whether or not Speaker Johnson is going to have a job. House Republicans, are they going to boot him now? Are they going to boot him after November? My guess is it's going to be after November, but my guess will be a lot of attention paid to that, which is probably why you saw him going to Columbia to try to avoid getting asked that question.
Does he have gardening leave? Does he have the 2-week notice? What is that? What are the terms of employment?
It's a motion to vacate. Democrats have signaled that they're going to provide the support needed to keep him in. Being a speaker in name only at the basically
that whole thing is so hysterical.
On Democrats.
Do some of these guys realize that had they left McCarthy in place, they might have been in a better position, at least with respect to their political policy positions, had they kept him? It's kind of amusing. You listen to some of these hardcore ultra right wing people, and they don't even want to acknowledge the fact that Trump himself behind the scenes was one of the big driving forces behind the Ukraine funding.
He changed it. I mean, he was able to get it by making it a loan.
It's just one big ridiculous grift. They don't want to win. It's just whatever. Sorry.
All right. Well, we're going to be watching the S&P levels. 5122 is the resistance level. That's the 50-day moving average on the S&P. It's important because you need to get through that, particularly if you can get some breadth, 90% type of breadth days to get you through that to reestablish the uptrend. Those things are important from oversold conditions. 49.54 is the support level, again, within the context of an uptrend there. In the 10-year yield, 480 is the next resistance level. 5% is above that, but I do think 480 should hold any type of move higher. 435 would be the equivalent level on the downside. Support on the 10-year yield, 35. And then Bitcoin, we do watch it. 72,800 is resistance. 59,755. 59,755 is support. The reason that we watch it is it does tend to have some relationship with the NASDAQ and the more speculative or risk-on aspects of the market. So a breakout to the upside would be helpful and certainly help solidify what we think is the seasonal tendencies, particularly in a presidential year, for a seasonal rally during the summer. Join us again next week. We'll be 1 week older, 1 week wiser. Don't forget to follow us on Twitter and LinkedIn. And if you want deeper insights, join us at RenMac Access. That's renmacaccess.com. Until then, I'm Jeff DeGraff.
I'm Neil Dutta.
And I'm Steve Pavlik.
We'll see you. Go Rangers.